All right, so you're here, the frustrated implementer. So, this is one of the common areas that I end up dealing with. This is often when I'll get the email from somebody, we'll get the call, we'll get the message because they've been out there putting stuff into place. They've been through a learning phase. They're still essentially in that learning phase because they're still essentially jumping between applying what they've learned and going back and learning more and more. But again, the usual problem here is that there isn't any mechanism that you have to get feedback. So, as the frustrated implementer, part of your frustration is you've learned a lot of things, you've probably applied a lot of things. Deep down, you don't know if what you're applying works, but you also don't have a system and a methodology that's repeatable, and you don't know how to test that system so that you can actually see whether or not it has got this inevitable edge. Or worse than that, you've bought into lots of different things that have promised a huge amount and haven't delivered. So in these videos, we're going to break down the ways and the mechanisms that you can set things up and break those all down so you can see exactly how you do go about moving from here essentially into level 4. Because level 4 is when things start to change. Once you get into what we call the focused refiner phase, it's not that everything is perfect, but you've ticked a lot of the important boxes and you are doing things in a certain and specific way that will mean the results, if they haven't come at this point, are going to come. They are on the way. So the way that I summarize this level is this is the summary. So I say you're essentially caught in the mess between learning and applying with no proper feedback loop, as I've already said. So this is an example of what I hear. I don't hear these exact words from one person, but this will probably ring true for you. If you hear something within this, will be there and you'll recognize it. I'm losing money left, right, and center. I've taken a course, but it didn't really deliver. Guess they're all full of you know what. Every trade feels like a test, and my emotions are all over the place. So the key thing here is that it's all very emotional, very intense. And oftentimes, what's happening is you're putting in a lot of time and energy and what you believe is focus and dedication. But actually, what's happening is you're very fragmented, you're jumping from pillar to post. But the main thing is you're losing money, but you don't know why. You have a few losing trades, you switch what you're doing. There's so much going on at this stage. It's very difficult for me to say exactly what it is for each person. If I'm speaking to you directly, there's a set of questions I can ask that will help you with that. But essentially, you're losing money, you're all over the place. You may have tried a course and the chances are it probably didn't deliver, or there was somebody out there saying that they were going to give you a high level of coaching and mentoring, but really it was very surface level. Or you haven't actually taken that plunge and you're still out there learning and trying to cobble together lots of things. And the difference between this and the avid learner is you've gone into the application phase. You have been trading for 2 or 3 months, or sometimes you might be 2 or 3 years, and you are still not getting that consistency. But what's happening is the way you're trying to achieve that consistency is essentially all over the place. So as it says here, there's no real focus on mindset. You're probably at the point where you've heard and seen videos and trading mindset's important, but you aren't actually at the point where you're joining up the dots correctly, because it's no good just having a good trading mindset if your system's still not right and you're not tracking your trades. So it isn't that trading mindset isn't important, and it is going to become a focus. And to get out of this level, you have got to start dialing in on that. But if the other things aren't in place, it eventually won't be enough to hold things up. A good mindset is no good if the system isn't there in the first place. So let's break down some of the areas of trading here. Before we get into the second video, I'm going to really deep dive and actually give you some practical things in each area to be focused on and looking at. And if you take the time, as I've suggested, to go back and watch at least the level below you and then watch the level above you, you'll see a little bit more detail where I go into how you should be analyzing a market and what constitutes a strategy. But I will touch on that again in video 2. But let's just break down some key things here. So we're going to start with 2 of the key areas, essentially your application areas. So your technical skill, your use of analysis, and your ability to deliver a strategy. Now, What I usually see at this level is where it says there, people are using what I think is a process, but they're just fitting trades to my bias. So I'm saying that as if you were saying it. So what happens is people go, yeah, I've really got a process. I've really refined it. But then when I look at it, it's not actually delivering on the key elements. It's usually overcomplicated. So the classic one here is it's still a case of layering on too many analysis tools, too many indicators, and essentially using that false construct. If I've got more things within that analysis process, I've got a better chance of success, or at least I'm safer and I'm less likely to lose. When in fact, what needs to usually happen here is things need to be simplified. And as it says there, it needs to be a framework that's proven and repeatable. And you need to have tested it to know within the framework that you're trading, because you might be day trading, you might be swing trading, you need to know that that works within the hours that you're trading. A classic example I see is people will take a strategy, and the strategy they've taken may actually be proven, but they trade it at random times week by week, or they don't trade it during the hours that the person has said this strategy works really well. It gives you this level of win loss, it gives you this level of profitability, but they're trading it randomly, and then they turn around and say it doesn't work. So not only have you got to make sure that it's a proven framework and it's repeatable, and as I've said in previous levels, when you're doing that analysis framework, it needs to be simple, and we're going to revisit that, as I said in video 2. It can't be something that's layered up with lots of different things. But on top of that, you have to test it relative to the times that you're going to be able to trade. And we're going to talk about data and testing more as we go through this level. And then strategy. Usually this is too broad. So what happens is you're looking at a market, and yes, you can see there's potentially some upward momentum, but actually in terms of the specific criteria that you need to have to get in, usually what happens here is it's either too broad, so essentially you get in because you see the market jump up and that gives you a reason to get in, or you're hyper focused. So what I mean about that is you're then hyper focusing in on what happens, and you've actually got too many criteria. So it's finding the balance between having enough entry criteria that it's repeatable and it's testable, so you know it has an edge, but also not refining that and being too hyper focused. And as a result, what happens is you end up with too many criteria. The other subtle one, which I'm going to talk about in the next video, and I'll show you an example of this, is where you become so focused on the entry criteria because you think that's my edge, that actually what happens is you start taking pullback entries and you're taking them right at a point when the market is in no man's land. So you actually become hyper focused on strategy and you forget the analysis bit of the process as well. Because remember, these two work hand in hand. As I've said, if you haven't yet, go back and watch level 2, the avid learner, where I go into specifics about this and how the two work in hand. Again, I'll touch on that on video 2, but this is so important. You're not just simply analyzing the market with a whole load of discretionary analysis tools and saying, right, I'm going to buy here because I haven't really got a reason to enter other than the overall picture looks like it's in my favor. But you don't want to be doing the opposite, which is saying, right, these are my entry criteria, A, B, C, and D, and you're entering a setup that is essentially a momentum-based trade slap bang on a support and resistance. Now, it doesn't mean that price won't break through that support and resistance and you end up with a winner. But what will happen is sooner or later, your eye will see, especially if you have a losing trade, that you had a level in the way. And then you won't do it on the next trade. And then what will happen is the next trade, when there's a level in the way, it'll end up breaking through. And then you'll say, I need to change this. So that's the example of what happens here. Is in this area where you're frustrated, a lot of the frustration is because you're being very reactionary and changing what you do all the time because you're not using this analysis and strategy process. And as it says there, you understand that there is a solid strategy that has clear rules. A, B, C must all line up before you get in. But if you just hyper-focus on that, you're going to be trading setups in the wrong area. So it's one thing having the right entry criteria, but you've got to trade it in the right place. And combining these two not only increases the probability of success, but what it also does is when the trades don't work out and you have the inevitable losing periods, you're okay with that because you know that you're taking the right trades in the right area and there's a system and a whole load of data behind it, either tested, live, or both, that correlates, and you know that over the long term you're doing the right thing. But you're not blindly just trading setups and not thinking about the terrain and the territory that you're trading in. All right. So analysis and strategy still key. Risk management. Now, at this level, a lot of frustration can come from bad risk management, because you may have started to put together, or as I say, cobble together a strategy, or even if you have taken the time to put a strategy together, if risk management is out of play, then you're in trouble. So the first thing to consider here is, a lot of the time, the trader, and you might be exactly like this at the moment, is you know what you should be doing with risk management, but because you're frustrated about the overall scenario and you are reacting short term, changing what you're doing, often that can seep into how you manage your trades. So a classic example with this would be, you know the rules, but in live trading, you're constantly adjusting stops and risk sizes. So let me give you a couple of examples. You may well have been in a position where you've said, right, I've got my system now, or you think you've got your system. You run 3 losers. So you have 3 losers on the trot. And then what happens is you get frustrated. And then you say, right, on this trade, you get a setup. The setup looks really clean. Everything lines up. You've got some extra confirmation, which has no bearing on the probability, but it makes you feel better. And then what you do is you risk 2% on that trade, or worse, you risk 3% on that trade. You think, right, one winner, bang, and I'm back into profit. So I only need one trade to cover all of the losses that I've just had. That trade then loses, and then either you come out and you say, right, I'm not going to take the next trade because you've had too much of a loss. You're feeling frustrated, you're feeling anxious, and then the next trade wins. And then you think, shit, you get back in on the next trade, you go in at 1%, that trade loses. So then you're in a situation where you've had 3 losers, a fourth loss at 3%, and then another loss at 1%. And suddenly what's happened is you've racked up 7% of losing trades, and you didn't actually take the winners because you've over leveraged. You've tried to exert your control on things, because what's happened is, as it says there, you have changed your risk size and you're manipulating your risk size. So that's one of the things that happens. Another one that I see is where you will start moving stops. So a lot of traders will, in this phase, get in and start moving their stops to break even, because what they do is think, they've seen it on a video, they've heard that once you move your stop to break even, then it's a risk-free trade. Now, the person saying that might be right, and that person saying that might have tested that on a strategy and that works for them. But you're doing it on a strategy that it might be suboptimal to do, or you might not even be doing it on a strategy anyway. You're just moving your stop. I only move stops on certain strategies and when price reaches a certain level of profitability, because I've tested that. And that's the key thing. Most people, and you are probably doing this if you are moving your stops, you're moving it randomly, you're justifying it, you think there's some logic behind it, but the only reason you're doing it is to feel that sense of relief, because now you can't have the losing trade. But what if you end up having 3 break-even trades that were all meant to be 3-to-1 winners? Well, suddenly you've ended up with no losing trades on those 3 trades. Yep, you're at break-even, but that could have potentially have been 9R, which could be 9% worth of profit, that is going to cover some of the losses that come on the next couple of trades. Traders don't think about that because they're reacting. And the common theme here, the word is frustrated. So that frustration creates emotional responses. So what's tending to be happening at this level is, even if you have got cobbled together some of what I'm talking about here, the emotion overrides things. You don't have the data to back it up. And as a result, you're making all these mistakes and it's just not clicking for you, and you're not starting to see that consistency. Which leads me nicely on. Actually, let's talk about this first. Stick to a fixed risk per trade. So that has to be the golden rule. If you're out there implementing, even if you haven't got the other things down at this point, and that's what your aim is to do, if you don't manage with a fixed risk per trade and keep that the same. I see a lot of traders go, oh, I feel a bit more certain about this trade, so they risk more. Or I feel a less certain about this trade, so they risk less. I risk the same on every single setup that I'm taking relative to that strategy. I do have some strategies where I have a lower trade frequency. So I already know what the percentage return is, I know what the win-loss is, and I know what the risk to reward is. If it's either a fixed risk to reward on each trade or it's a variable risk to reward, I still know what the average is. But if that strategy has a lower trade frequency relative to the other trades that I place, I may risk more on that particular strategy. But I don't vary that risk. If I'm risking 1.5% on that particular strategy because it's got a lower trade frequency over a year, 3 years, 5 years, I will keep that risk the same on that strategy. I won't change it. If on another strategy, I'm only allocating 1% risk on that particular strategy, I won't shift it or change it. It will stay at 1%. So again, that's starting to get a little bit more complex. But the key thing is, regardless of the strategy, the risk that I have chosen to trade stays the same. I don't chop it and change it because I want to make my losses back, or I feel more confident about a trade that I'm looking to take. I keep it exactly the same. And I keep stop loss placements simple. And that's the key thing, and consistent. So that's all key. But how do you get to that point? Well, one of the biggest issues I see for people at this level, and you may be in exactly the same boat, is they are simply not applying any data and journaling. At most, as it says there for data, they might be downloading broker reports but don't really know what to look for. And most traders are just looking to see whether or not the trade is profitable or not. Now, there is a very specific process that you go through to look at data. We're going to examine a little bit of that in video 2. Okay. But what you should be starting to do now is thinking, right, learn what data matters and how to analyze it. I'm going to show you that in video 2. And this, as I've said, is the blind spot for most traders. And it was for me. So when I started out, I was in the mindset of you've got to be in it to win it. So I was the frustrated implementer because I wasn't getting the results I wanted, but I was there, I was trading, I was focused. But unbeknown to me, and this is what my first mentor did with me, he kept saying to me, right, Ali, I want to see your trades at the end of the month. And I was always too busy. I was never busy enough not to trade, and I always managed to be in front of my screens when I needed to be. But when it came to submitting data, I was always going to do it, or I was always halfway there. I didn't have the complete finished amount. But when I finally did, and what was interesting is my mentor said to me, he said, look, you're going to get to the point where your frustration will build up to a point that you will get to the point where you will do this. Now, it might be now, it might be in 3 months, it might be in a year, it might be in 2 years. But ask yourself, how long do you want to wait? And that was the moment that it shifted to me, because then I imagined, well, if I carry on doing this for the next 2 years, 3 years, just pushing forward, essentially what I say to people is, I could be pushing forward, I could be giving it my all, I'm in the markets, I'm doing most of the other stuff right, but if there are a couple of things wrong, it's like going full steam ahead, saying, right, I want to reach this sunset, and I want to get to this sunset and see the sunset. But unknown to me, I'm running in a zigzag fashion, or worse, I'm running east, I'm running in the opposite direction. And essentially for me, I was like, I feel like I'm doing so many things right. And that's why the frustration was there for me. And it's probably there for some of you listening to this, is you feel like you're doing loads of things right. But you've got to think of it like the 80-20 rule. There could be 20% of things that if you shifted and started doing, or it could be not doing. Don't forget, sometimes it's not actually what you do, it's what you don't do. Those 20% of things at this level are likely to have 80% impact. But the problem is a lot of the time you don't know what they are. So having somebody there to be able to help you is key, but also that starts with having the data. So this is my big push to you guys, is yes, you've got to have all the other things in play, and you might be listening to this and analysis is the major problem, or you know that you're having a problem with risk. But if you aren't logging your trades, it's highly unlikely you will have the awareness, or on some level you will know that you're not doing it right, but what's happening is you're sweeping it under the carpet. But if you commit to recording your data, you will start by default to get better. So many traders I work with, just knowing that they've got to submit their data to me at the end of the month is enough to keep them more disciplined, or at least to take the discipline from a 50% level all the way up to an 80 or 90% level. So there's that massive initial shift. And that can just be because, one, they're recording the data, and two, they know they've got to submit that data. So data is critical. And for me, what happened was, one of the things that I was doing was I was very aggressive in the market. So I wasn't revenge trading where I would just take random setups in an effort to get the profit back. But what we found looking at my data was if I had 2 losers in the morning. So what I used to do is I used to trade in the afternoon, in the evening of the UK time, because I was essentially trading the morning and afternoon US sessions. So if I had 2 losers in the morning US session, I statistically had 4.8 trades that day. So on average, what it basically meant was if I had 2 losers in the morning, most of it, not every single time, but I was more likely to have nearly 5 trades that day. Now, on some of those days, because once I had the data, I was able to look at this in more detail. But on some of those days, they would genuinely be 5 trades because, again, that's a false premise that a lot of traders have at this level. They'll hear things like, once you've had 3 losers that day, stop, or once you've had 3 winners, stop, or only take setups, only take the first 2 setups. For me, the strategy is much more likely to be optimal if you trade as and when the trade's set up. So on some days, there was genuinely 5 setups that day. On some days, there was even more. Some days I would have 6 or 7 setups. Other days, I'd only have 2 or 3. But despite those genuine days, what I noticed, and this was, again, working with my coach and mentor to be able to see this. Well, so I should say, what we noticed was that more often than not, on the days where I had multiple losers, a minimum of 2 in the morning session, so my afternoon, I'd come in, start trading, I would end up with more trades that day. And what we were able to see by seeing the data is we were able to go back and look at those trades. And what was interesting was those trades, like I've said, weren't complete random setups with no analysis and strategy behind them. But what I was doing very subtly and unbeknown to me most of the time, what was happening was I was actually diluting the strategy and letting some of the rules go, or missing things in the market, or missing an important level that was in the way, which meant I shouldn't have taken that trade. And I was missing those things or ignoring them. And the reason why is because I wanted to get back to break even for the day. So the mental framework I had in my head was, if I can just get back to break even, then I can feel that sense of relief. Similar to somebody moving their stop to break even, or moving their stop up because they want to feel that sense of relief. Because remember, trading is an uncertain environment. If we can generate and create relief through the actions we take, we're going to feel better. But sometimes those actions aren't going to help you. So the key thing is, the only way I create relief is to follow my system and my rules. But the challenge is, and I see this with traders all the time, is they think they're doing that. But actually what's happening is they're bending the rules ever so slightly because they're trying to revenge trade, get back some of the losers they've had that day. And that results from thinking too short term. And we're going to talk about mindset in a second, but that's one of the fundamental issues at this level. So as it says there, you've got to learn what data is important. You've got to have the discipline to track it. And for so many traders, the challenge in this area is they don't know how to do it. They haven't been shown it. They know journaling and data collection is important, and all the gurus are spouting it off, but actually no one's got a systematic process to show you how to do it, and then what to do with the data, because it simply isn't enough just to be downloading your broker statements and seeing what the profit or loss is at the end of the month. You have to actually go through the process of understanding the data, and as I've said, manually doing this, all right? It might seem archaic in this age of automation and everything else, but manually filling out your spreadsheet, manually journaling how you are feeling using a simple formula that I'm going to talk about in the next video. Being able to do that is going to increase your level of discipline. The mere fact you do that will increase the discipline, even though you will make mistakes. But the hardest part is committing to that. So yeah, this is a big, big area. Yes, I'm making the assumption you listening to this have got analysis and strategy and risk in the right place. But even if you haven't, those 3 elements there that make up the actual trade execution, what we would call the element of trading, analysis, strategy, risk management, externally from that, a subset, data and journaling, start getting those in place as well, and they will affect each other. So good data and good journaling is going to improve your analysis, strategy, and risk management. And a lot of the time when I'm working with somebody, that's what I'm feeding back on. I'm looking at their data, I'm looking at their journaling, I'm seeing the patterns, and then I'm able to link that and correlate that to their risk management analysis and their strategy. And ultimately, to the last one I want to talk about here, which is mindset. So I said this a minute ago, the fundamental problem here and what creates all this emotional fluctuation is that most traders are reacting short term. I used the example earlier of saying, right, I'm going to take this trade, and I'm hyper focusing in on the entry criteria, and I'm going, right, I'm going to enter at this point here. And I've missed through my analysis process, or not having a clear enough analysis process, a whopping great resistance level. Take the trade, price bounces off the resistance, price falls away. And as I already said, the trader's then looking at that going, I shouldn't have taken that trade because there was a resistance in the way. So the next trade comes along and they look and see that there's resistance in the way. They don't take the trade. And on that trade, the trade breaks through the resistance and hypothetically would have hit their target. So then they turn around and say, so I should ignore support and resistance. So then that frustration kicks in, it links to their analysis and strategy, and they're all over the place. And you might be listening to this going, yeah, that sounds familiar. Or when it comes to moving stops. So the easiest thing to say to a trader is you need to start thinking long term. And that's one of the key action points I'm going to give you at the end of video 2 in this section. But you're probably sitting there thinking, well, how do I do that? Well, part of the way that you do that is get your data and journaling on point. If you can get that on point, and it doesn't have to be war and peace what you're doing, we have a very specific process that traders go through to do that, and I'm going to show you that in the next video. The key thing here is data links to mindset. If I'm going through a 3 or 4 trade losing run, or sometimes even more because they still happen, if I've got 6 losing trades on the bounce, and actually it's probably only about a month ago we had the exact thing happen. And some of the new traders, you could tell they were a little bit jittery because they're like, is everything okay? And I'm like, yeah, it's fine. But even when that happens, I tell them, go back to the data. Go back and review all of the historical data for those strategies so that you can actually see when this has happened before. Because part of what creates calmness and a relief is knowing that what you've done here has happened before. And if you can measure that and say, I've done everything right with the setups I've taken, we just happen to be going through a bad losing run. And then you can see, well, look what happened after those six losing trades. We had 5 winning trades, and then we had a couple of losers, and then another 7 winning trades. So you can see the opposite. You can see the upside after that. And invariably, the problem is most traders are right at that point where they're feeling frustrated with their results or things aren't going for them. And that's when they start going back, changing things, doing something else, going back to YouTube. It's always at that moment you hear about this new super duper indicator. Suddenly you're changing things right at the point that you just need to hunker down and accept the fact that the trades aren't always going to go your way. But if you haven't got the data to do that, it's much harder for your mindset to dial in and be okay with that. So when people say, how can I improve my mindset? The key thing I want you to take away from this video is if you are logging your trades correctly and effectively, that is going to help improve your mindset and naturally give you what we call a wider space and time horizon, or a longer space and time horizon. So another thing that you can do is start identifying what sets off rule breaks, what we call look for triggers. So start identifying, and you do that through your journaling, the things that trigger rule breaking, or from the other side of the fence, the things that trigger you to pull away, a more fear-based response and not actually take the trade. What are the things that do it? Is it a run of losing trades? Is it actually a run of winning trades? I've worked with traders where a run of winners can be the issue. So start identifying your triggers through the journaling process and make sure that you learn and have time during your week to pause and reflect. That can often be at the end of a trading day, end of a trading week. Some traders prefer, especially day traders, not to actually go through their trades for the day and reflect on those at the end of the day, because they know that very soon, i.e. the next trading day, they're going to have to get up and trade. And what they don't want is to be thinking too much about the trades that happened the previous day, and they want to remain present for the next trading session. So they will leave that until the weekend. And subtly, a lot of them will do it on a Saturday, because then they've got time to sleep on it and process it and spend time away from their screens for the rest of the weekend. So they come back with new insights, or at least clear on what they're going to be focusing and going on to the next week, rather than very subtly seeing maybe things that they've done wrong, analyzing the things that they've done wrong, and bring the initial frustration of that into the next session. So that's quite a subtle one. For swing traders, we do more of this at a end of month period or even an end of quarter, because the end of the month is not actually a long period of time for swing traders. In fact, some of the day traders I work with will wait until the end of the month before they review in great detail, because they want to widen their space and time horizon. A big fault for day traders, especially at this level, and why frustration occurs, is they often think they should be making 2% a day, or they should be making X% in a week. And they think because they're in front of their screen so much, that should easily be possible. Or they make the mistake of being 2% up for the day and stopping, when they actually could have had a day where they were up 6% for that day, and then that covers the losses that come the next day and the day after. So start thinking about how to pause and reflect and reset in real time. So what I mean by that is, if you've got the data there, it might be that as a swing trader, your next trade isn't for another week, but you've got time to pause, reflect, and reset real time. As I've just said, if that's you as a day trader, you might be doing that over the weekend, but there are going to be times when you're trading in there and you've got a trade that happens and is done by 10:30 in the morning, and then your next trade is setting up at 10:45. So you've got to be able to pause, let whatever happened on that trade go, i.e. the result or even a mistake that you've made, reset in real time. And that's something that for a lot of traders takes time to work on, but data and journaling will really help that, because it always starts with awareness. If you don't know where you're going wrong and don't know the patterns you're running, and a lot of times don't have the feedback to be able to see that, or don't create a feedback loop yourself, it's going to be very difficult. All right. So in essence, there is a lot to work on as a level 3, as somebody who's in that frustrated implementer phase. And the skill is being able to look and prioritize which you think is important. So there can be a little bit of trial and error going on in there. But again, if you can create specific feedback loops, that will help you end up focusing on what needs to be focused on first. So you might be here and thinking, shit, I don't really have a clear analysis and strategy process. Well, I'm going to touch on that in the next video. Go back and watch the previous video. Also, when you watch the level above, you'll see me reaffirm this, and I'll go through this in more detail. Or you might say, yeah, it's risk management that I need to focus on. But I would say, with the experience that I've got, that even if it's one of those three or all of those three, one of the linchpins is starting to record your trades effectively and correctly. If you start doing that, then that's when it starts to shift. And that's where you start to see people move from level 3 into level 4, invariably doing the work that they've been avoiding and getting the feedback that they need to put that together effectively. All right, so I'm going to end that video there. It's quite a bit to cover. In the second video, we're going to delve into some more specifics about each of these, and then I'll talk about specific keys to success and some action points that you can take away. So you might be thinking, what's next? Well, feel free to follow me here for more trading insights. But if you're looking for an even more clear, specific and proven route to your own trading success, then check out the links in the description and they'll show you exactly how we can help.